What's up, everybody? 360 in the house. Welcome back to the 360 Elite Trading course. Next chapter today, we are talking about show me the money. We are talking about taking profits. Hopefully you guys have been having a blast in this course, in all these chapters. Hopefully you're learning. Hopefully you're observing. You're just growing in your knowledge, and hopefully you're watching this stuff more than once. And you're taking good notes, and so on and so forth. But right now, I want to take a quick cut from the things we've been doing, some of the trading strategies and stuff, and I want to talk about taking profits. This is really a very simple, pretty much everything we do, I feel like, is simple, especially once you get the hang of it. But taking profits literally is ultimately one of the easiest things to talk about, but one of the hardest things for traders to do. And I don't know why that is. Well, I do. It's because of psychology. It's because it's opposite of what how our psychological makeup is. It's just so that's why we're gonna hammer it. We're gonna discuss it, and hopefully you guys can gain something from this. It sounds so easy, taking profits. Everybody wants to take profits, but why do people have such a hard time pulling the trigger? Some people just have a hard time pulling the trigger at all. And then some people just are like, when do I pull the trigger? Hey, I get both of those things. So we're going to talk about that right now. Let's get rocking and rolling. All right, taking profits, some basic rules. Look, entry, timing your entry and getting your trade right as far as getting in. People spend so much time on that. And that's great. But just as important as your entry and your initial stop placement and setting up the trade is knowing your target exit before you even take the trade. Yes, it's vital. And I don't understand why traders make trades without knowing their target exit. Like, you got to know that. You got to have your strategy. You have a strategy for entering. Why wouldn't you have a strategy for exiting, for selling, for taking profits? Some just leave that up to whim or whimsy or when I feel like it or off my emotions. And when you do that, you are susceptible to trading off of FOMO, fear, and greed. And oh my goodness, I don't understand why. And we're talking about trading. When you take trades, know your expected exit where you want to take profits before you take the trade. It should be a key component, a key part of your trading strategy. As important as charting, as important as technical analysis, as important as your entries, as important as your initial stop. Where do you plan on taking profits? And for different people, that might be different places. Some of you are scalpers and you like to get that quick penny. Some of you are trading with a lot of volume and you can afford to do that and make decent money that way. Some of you can't. You have smaller balances. You've got to make, to make it worth your while, you've got to make a larger percent. So whatever that is, know it. Know it before you take the trade. Some of that comes with knowing yourself. Are you patient? If you're patient, you might be able to swing trade or stay in the trade longer. If you're impatient, and you know that about yourself, you're probably going to want those quicker profits. So knowing you and who you are, knowing yourself, is so important. It's so important as a trader. The worst traders are people who don't have good self-identity. They don't know who they are. They have self-image problems. Why? Because all of those issues come into play with their trading. Just like it does all other areas of the life. Relationships. The best traders know themselves. And so they're able to apply that knowledge and trade based off of their personality. And that is fantastic. So anyway, basic rule of taking profits is know your profit target, your exit before you actually enter. Rule number 2. It sounds so easy. Sell into the rally. Good traders sell rallies. That's it. That's the secret. Traders don't sell dips. They don't wait. Now it's pulling. I missed it. No. They're trading, they exit or they sell as it's skyrocketing. It's not about catching the top. Because by the time you see the top, what has it already done? It's already reversed. It's already turned around. So whichever leg your profit target is at, whichever leg that is where it's running towards that, that's the leg you sell into. You should be selling rallies. Now, we're not talking about getting stopped out. That's different. But when you are getting ready, it's heading towards your exit, and it's skyrocketing, it's rallying, you sell into that. That is an active trading execution. Boom. All right. And then, very important, once you sell, don't sit there and dwell on what it's doing next. Move on. Move on to your other trades. Go move. Now you got cash ready for another trade. This is what happens though. You sell that rally, and then you watch it to see what? What is it you watch it to see? To see if it keeps going up. So you can say, oh, if I would have. This is a dangerous game. This is a dangerous game. Some of them are going to keep going. So what? Who cares? If you do this, and let's say you sell, and then you watch it keeps going up, and you're like, man, I should have. Guess what you're going to do the next time? You're going to apply that psychology that you just took from this, that mindset you just took from this trade, even though you took profits. You're going to say, I could have gotten more out of it, and you're going to go into the next trade saying that, and instead of selling the rally, you're going to be like, oh, it's going to keep going higher. And so you're going to say, well, last time it did, so this time it's going to, only this time you're going to get stuck holding a 30 bag. You understand that? Just because it happens, what? Hindsight is 20/20. Hindsight is 20/20. Anybody can armchair this and look at the past and say, I shoulda, coulda, woulda. That is a dangerous game to play. Because then you're going to apply that onto your future trades and you're going to make mistakes. You might get lucky once or twice, but eventually you're going to make mistakes. So move on and congratulate yourself that on a trade well done. You made profits. Move on. Who cares if it keeps going? You did your job. You are a winner. It is a win. Period. Now, just because I move on to the next trade, and this is important, don't be afraid to continue to chart the same stuff you've been trading. Some of the best traders have a small handful of stocks or crypto or whatever, like a handful of 10 or 5. And guess what? That's all they trade. They don't trade anything else. Why? Because it breeds a familiarity. You start to get in tune with the way it moves, with the percentage of moves it goes, with its ups, with its downs, with its volume. You start to become familiar. Whereas if you try to trade all 5,000 cryptocurrencies, do you honestly think you're ever going to be familiar with any of them? No. No, you're not. Some of the best traders compile a watch list and they watch the same crap. And they trade the same stuff. And they chart it over and over and over again. We have already done, in the short 6 weeks that I've been releasing trade alerts, what is the one crypto we have now successfully traded twice? Cardano. Boom! 2 separate trades, 2 separate wins. Bam! Why? Because I know Cardano. I know it. I'm plugged into it. I know how it moves. And I trade the same things. Because I know it. I understand it. That is what I'm talking about. When you're familiar, you become familiar with the way that it moves, the volume, the percentage it moves at a certain point in time. I mean, literally, you literally do start to become familiar with the ins and outs and the undercurrents of those items. It's familiarity, and it's what makes you better. It makes you good versus never seeing it again, never coming back. And you're familiar with the chart already. So why wouldn't you continue to use it? So, yeah, move on to the next trade, but don't just delete that out of your watch list. Continue to chart it. Wait for its next consolidation or pullback, even though you've already exited, and then find a new strategy for entry and trade it again, man. It's beautiful. It's a beautiful thing. It makes you a stronger trader. I freaking love it. All right, hopefully that made sense. Let's see what we got here. All right, let's look at our taking profits, profit killers. Yes. greed, that it'll keep going higher mentality. Like I said, for some reason, there is a psychological thing for some people when they start trading, especially holders that try to become traders, who just can't pull the trigger. And they end up turning a trade into a hold. I have put out some incredible trades. We have people that are subscribed to these trade alerts. And some of these run 100%. And I get tweets saying, oh, this is doing so good, I'm going to convert it into my whole portfolio. And I'm like, I thought you already had a whole portfolio. I thought the name of the game here was to have a trading portfolio and try to churn some profits. It's like they completely lost track of what the goal and the intention was here. So, dude, you've got to have a whole portfolio, yes. But, when you see massive gains on the table, some people just, that greed sets in. They're like, oh, well, if this is doing this, it's probably going to return astronomical numbers. I'm just going to hold it. And, hey, if that's what you want to do, great. But that's not trading, guys and gals. That's not trading. So that whole greed, it'll keep going higher. You're watching it go up. You're watching it go up. It's hit your target. But you're like, yeah, it's going to keep going. And all of a sudden it goes up and, agree, and then all of a sudden the bottom falls out of it, and now you're watching it come back down. You're like, oh, it'll go back. Now you see that you had 100% at your target, but now it's at 125%, and so you see it drop back down to 100%. Oh, it's going to go. I want that 125%, and all of a sudden now it's only up 75%. And you're like, well, I had 125%. I'm going to wait for it to go back up, and so it just continues to drop and drop and drop, and you turned a gain into a loss, which we're going to get to that one in a minute. I mean, that's the psychological battle. Here's another one, not monitoring or managing your trade. All right, so I get it. We got to go to sleep. Crypto's 24/7. Some of us work, some of us do things. I get that you can't always be monitoring. The best traders in front of the screen, of course, monitoring. Yes. But I get that that's not always possible. So if you're not there and you're not able to monitor or watch it, you got to do what's right by the trade. That means either moving your stops or setting those sell entries in there already so they're auto at your profit target. You have to constantly monitor and manage your trade. It's not a set and forget. You should be on top of it. You should always be maneuvering, monitoring, and managing. Be proactive. Always be watching it. Update your chart, even though it's moving. Never let a gain turn into a loss. And I just kind of went over that psychology, that whole greed, it'll keep going higher. And maybe it does, and then you just watch it start to drop, but you think it's going to go back up. And all of a sudden, it turns into an absolute cluster. And then it explodes in your face. And then you're like, oh, I screwed that up horribly. And how did you screw it up horribly? You psyched yourself out of it, man. Greed and then fear, all in one trade. It's a bunch of garbage. That's why you must stick to your plan. You must stick to your strategy. Now, in saying all of that, another profit killer is not allowing yourself to make mistakes. Now, if you're making the same ones over and over, you may want to stop trading. But understand and know there are going to be times where you make a bad decision or you do make a trading mistake. That doesn't mean you suck. That doesn't mean you're a horrible person, and you should not let it quench your fire or your confidence or your self-image. And, if you already have a bad self-image, you already have insecurities, then, that could wreck yourself. If you make a mistake, you could beat yourself up. All you're doing is you're creating a sense of fear when it comes time for the next trade. Don't do that. You're creating pressure on yourself. So be okay with making a mistake. It's okay. It happens. And that leads to the final one. They're not keeping a journal. So making mistakes is great, but you should have a trading journal. I'm not talking about writing down the entries. I'm talking about writing down the mistakes that you made, the things that you learned from a trade. What type of emotions did you feel? Did an emotional trait cause you to make a bad decision? Write that down so you have it to refer to. You have it to look at. So you have something to learn from. That's how you grow. And then you can begin to It's not about, we're humans. We're going to feel. So I say you want to trade robotically, but come on, we are humans. But the goal here is to recognize the emotion, log it, journal it, identify it, and then begin to desensitize yourself to that. Begin to notice it and then turn your back on it, desensitize, and stick to your strategy. Stick to your plan. Stick and use your journal. Keep a diary. It is important. Don't bypass that up just because you think it's boring and time consuming. Man, not only should you be logging all of your trades, every stinking one of them, which I do by old school Excel spreadsheet. That's right, I'm old school. I'm as I'm as non-technological as it gets, but keep a trading journal. Yes. These things all tend to give you a bulwark to help you to keep you from avoiding killing your profits. You don't want to kill your profits. All right, and the last slide I told you this one's going to be long. I mean, this is simple, but we've got to talk about it. It's important. It literally is. It's so funny how simple this is, but it turns out to be one of the hardest things for traders. It's that taking profit. So here's some ideas. So on your initial trades, when you set up your strategy, that you have placed an initial stop. So one idea is to use that stop percentage. Let's say that stop percentage is placed 15% below your entry. So one idea for taking profits is if your crypto goes up, let's say your stop is 15% below your entry. If your crypto goes up 15%, take that percentage off the table just so you can, if it does go against you and you get stopped out, you're at break even. Woo! Yeah. How do you like them apples? That's one idea. That's just an idea. I'm just giving you ideas for taking profits. If it's 15%, 10% below your entry, wherever that stop is, but your crypto goes up and now you're in the profit, that same percentile, pull that bit off the table. And so at the very least, if it just is a head fake or it goes against you and you do get stopped out, you can be like, boom, I'm pretty much at break even. I mean, that's just one idea. Some of you guys, I probably never thought of that. All right, take full profits at scalp. By the way, when I put out my trading ideas and my targets, those are guidelines. You guys are taking this trading course for a reason, so that you can get in the weeds. You can draw your chart. You can draw your own conclusions, your own entries, your own exits, and use mine as guides, as a guide. Just because I give them to you doesn't mean you can't take profits at a different area or you saw something else. I mean, you will be as good as I am if you continue to operate in the same manner. And you can still come up with different things that work. So again, take full profits at scalp. That's for some of you, not all of you. If you're a impatient person or you have a lot of money on a trade, then a 10% move could be a huge return for you. If you only have 500% on a trade, $50 and you're scalping 10%, $50 is not going to really, that's going to barely pay your fees. So that, scalping may not be your best option. So, but for those of you that have the capital and love these scalps, these quicker, boom, 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 on to the next one, there's nothing wrong with taking full profits at scalp. Another trading idea is to take some off the table at scalp or target one. So an idea is to, let's say, take 50% or 25% and then ride the rest. If that's in your nature, you feel good about that. And then when you ride the rest, use stop placement. So if you let's say you reach an initial target, and let's say you pull some out. Let's say you pull 25% of your profits out. You pull it out, boom. Now you want to wait for that trade to set up new support. As soon as it sets up a new support, you want to move your stop up so that you now lock in those profits. So if it does reverse or go against you, you're pulling out the rest at profit. But you can ride it if it continues to go higher. It's a beautiful, beautiful strategy, especially for those that like to swing trade or stay in the trade for additional targets. It gives you options. It does give you options. But stick to your original plan. If you continue to be this person that makes a trade and you can't sell at your original plan and you're always fumbling and bumbling, eventually it's going to wreck you. It's going to hurt you. So whatever you decide at the beginning, stick to that plan. If you are selling dips, you're doing it wrong. Now, you can get stopped out because you move your stops up on dips. That's fine. But if your goal is to sell a rally or sell into your target, you should be selling that rally. You should be selling into that rally. If it hits and it's already turning against you and now you're selling on a dip, well, that's not how it's supposed to go. Good traders sell into spikes. Good traders sell into spikes. We buy fear, we sell greed. That's it. Good traders buy the blood, they buy blood in the streets, and they sell your greed. They sell into that greed. Somebody's buying that leg up. You already entered this bad boy. Someone is buying this at a much higher premium. We want to sell it to them. That makes you a successful trader. We want to sell it to people at a premium. We want to buy it low, sell it high. It sounds so dumb, so simple. But why is only less than 10% of traders effective at it or good at it? Because it goes against our psychology of fear and greed. It completely goes against our strategy. Always be watching Bitcoin. I'm going to tell you right now, if the last couple of days didn't prove that point to you, you're never going to get it. You're never going to get it. You know, the alt dip the last couple of days while Bitcoin got pummeled shows you that it don't matter whether you buy Bitcoin or not, or you actively buy it for a trade. You are trading Bitcoin. Always, my chart, my Bitcoin chart is always in front of me. It should always be in front of you. Always, because it's going to help you make decisions. So decisions on your trades for your alts should be checked against what Bitcoin is doing. And you've got to learn that. Over time, you'll learn how things work. But the only way you're going to do it is by watching Bitcoin and listening to me, and eventually you'll have it. And then always eliminate that large loss. We talked about that in the last one of the last previous chapters, so I'm not really going to go into that. But you want to, if you can eliminate the large, look, only 4 things can happen. Large loss, small gain, large gain. If you can eliminate the large loss, you can never be defeated in the game of trading. Because the small win takes care of the small loss, and then the big win takes care of itself and makes you money. It truly is that simple. This is a simple class, but it's the hardest thing for people to do. Start taking profits. Start selling rallies. I don't care if you have to say that to yourself 1,000 times. Make money. Stop being wishy-washy. That's it, guys. All right, hope you love the class. Until next time, here comes the boom, baby.